Hey guys.
No
Okay.
worry. Yeah. So welcome all of you to this exciting talk on the post-COVID recovery in terms of, I think, Angela, I think you took screen control. That's okay. No worries.
Okay. Well, I can not.
No, not a problem. Not a problem. So first of all, let me just quickly do an intro of myself. I'm Satish Kambalimat. I've been in the Austin area coming up on 30 years. I'm a charter member with TIE. I've been a local entrepreneur. I'm currently the CEO and founder of Predicier. So that's who I am. Now to talk a little bit about TIE, which has been an organization in the Austin area for almost 30 years. As you all know, it's membership-based. It's a not-for-profit organization that excels in fostering entrepreneurship, networking, education, incubation, and investing. And we are part of the largest entrepreneurial organization in the world. And we have some very exciting initiatives in the women entrepreneurship space, in the T-by-E, which is Young Entrepreneurs Program that I'm quite involved with, and also angel investors. So now to talk a little bit about our speaker, we are very fortunate to have Angelos today to speak to us about economic recovery and the outlook for the next 24 months. He's currently, he's the founder of International Accelerator, and which helps foreign entrepreneurs have access to US markets and funding. And he has been with the Austin Chamber of Commerce for 12 years in a leadership role as a chief economist. And he's been very instrumental in attracting many technology companies and bringing in significant job growth in the Austin area. He has brought in massive capital investment to the tune of $26 billion. And some of the companies that he has attracted to the Austin area are Apple, IBM, Samsung, Motorola, AMD, Cypress Semiconductors, Applied Materials, Tokyo Electron, and Sematech. So he's got a very rich pedigree of bringing outstanding companies to the Austin area and helping Austin grow. So before I hand it off to Angelo, a quick housekeeping note. All of you will be on mute, and please send your questions to the Q&A part of this section on your Zoom. And at the end of the talk, I will curate those questions and ask those questions. And now over to you, Angelo.
Well, thank you, Satish, for that wonderful introduction. You referenced a lot of my accomplishments. It's not about one person, it's about a team. And I had great volunteers and staff when I was with the Austin Chamber of Commerce to have had the successes that we have had and which continue today. So the Austin Chamber of Commerce is really the power base where all the community efforts are rallied together to attract new companies and new capital investment. Mm-hmm. I'm just happy to have been part of that effort early on, where we established a very strong economic development program. So my intent today is to actually, can you see my screen?
Yes, we can.
You can see my screen, all right.
Yeah.
Is to give you an economic update and forecast. The interest, I guess, from a lot of people is, are we through COVID? When would we be seeing a full recovery for our economy? The forecast, I guess, for Austin and Texas. But before I do that, I need to review a little bit about who we are and what we do. I have two firms. One is Angelou Economics, and we are an economic development consultancy doing strategic planning work for cities and counties and state governments, and as well as foreign governments. We've done this work for over 600 cities, state governments, and foreign locations around the world. We are also very active in corporate site location work, where we help large technology companies, for the most part, find the best locations around the country or the world for their investment, and negotiate all the permits and all the incentives. We've cited, again, over $18 billion worth of projects, and we negotiated over $3 billion worth of incentives for them. Economic impact studies is something that we also do, and workforce and labor studies for many of our economic development clients, as well as corporate clients. So these are a select list of clients that we've had in the past. However, as Satish mentioned, I am also the founder and CEO of the International Accelerator, where I spend most of my time nowadays. 90% of my time is spent in helping our portfolio companies, and we have 18 of them, succeed in the US market. So we are singularly focused on foreign-born entrepreneurs. There's plenty of other places in Austin and elsewhere for US entrepreneurs to be helped. We chose this market because no one else was doing it, and we, being a foreign-born myself, I felt that I should personally be helping others succeed in the US, just as other folks helped me succeed in the US. So it's kind of paying back the community. We are a for-profit entity with 18 portfolio companies. We take up to 15% equity stake in each one of them. Our program is 12 months, is free. We actually provide even free housing for 5 or 6 months. We pay for their lawyers to incorporate in Delaware and Texas. We've raised, actually those numbers are not correct, close to, our portfolio companies have raised 74 million so far. Our valuation of the accelerator is close to 350 million today. And we engage with a lot of mentors and advisors throughout the US, as well as have quite a few referral organizations that we work with around the world, usually incubators and other accelerators around the world. I don't want to delay. So this was kind of a little bit of self-advertising for me and my companies, but I want to delve right away into the US economic outlook and kind of give you my perspective of where we are. COVID-19 and the pandemic have affected all of the economies around the world, and the US was no exception. Last year, we ended up losing 3.1 million jobs, much better than what we originally had anticipated. We've had over $75 million of first-time jobless claims, which was unprecedented for our country. But COVID-19, it appears that it's going to be reaching its end of the road, at least in terms of the significant harmful impacts on the economy. And the light is definitely at the end of the tunnel to see a fully participating economy by early this summer. We expect the recovery to occur gradually, but so far, I think some of the forecasts that I have seen of others are predicting at least an 8% growth of GDP this particular quarter, and maybe 4 or 5% next year. But after that, the US economy is going to get on its long trajectory of growing at around 2% per year. So that's the good news, that the economy is going to get back on its feet, and we're going to emerge into what I would call a new normal. It will never be the same economy as we had before, but we are also going to become stronger than ever before. That has been kind of the history of how the U.S. economy has dealt with prior recessions, if you will. Exports are going to recover, but we're still going to be below the 2018 and 19 levels, only because the pandemic has affected the economies around the world, and um, our exports cannot continue at the same pace as they were before the pandemic, because a lot of these countries have also um, experienced quite a few economic problems themselves. Corporate profits are at a record high, um, boosted obviously by the tax cuts. That might change somewhat with the new administration talking about higher tax rates for corporations and individuals, and particularly the capital gains tax. But nothing is yet 100% concrete or crystallized, so I don't want to forecast on speculation. But as we draw closer to a public policy on taxes and what might actually be a package that looks like it's going to have support in Congress, then we'll take a look at we'll take another stab at forecasting that. As far as the Austin economic update is concerned, we've lost last year 23,000 jobs, better than anticipated. We had almost 240,000 plus first time jobless claim, a record for Austin. But when we look at the drop in the leisure and hospitality sector, we lost almost 26,000 jobs. So had we not had this pandemic, the economy would actually have been extremely, would have a more positive outlook, and we would have had job growth last year. But that did not happen. But we do expect that we'll have positive job growth this year, maybe even higher than what I will be showing and sharing with you later on, as the economy has recovered. And there's so much pent-up demand for travel and leisure activities. Everyone I talk to, they have plans to take off and go to some places in the US for vacation, other countries as well, to just get out of their home. There's quite a bit of pent-up demand. So I think the airline sector, the hospitality industry are going to have a fairly robust recovery this year and next. The unemployment rate in Austin is now, as of January, is 5.4%. Compared to this chart depicts the unemployment rate year on year. Compared to the unemployment rate that we've had in previous years, obviously that's almost doubling of the unemployment rate. But that's also because our city and metro area attracts a lot of newcomers who are moving here, some with jobs already, but some because the prospects of finding a job in Austin are much better than the locations where they're coming from. So there is kind of an inverse or peculiar situation in Austin. We attract a lot of people because we have a very strong economy to begin with, but then if the economies of other cities and in other states are not performing as well, we attract even more people because the recovery in Texas and most of our cities is better suited for them to find new employment opportunities. When you look at how we compared with other cities, only Salt Lake City and Indianapolis fared better than Austin. We had a 1% drop in employment. This is different than the slides I've showed you earlier because it's year on year, December to December. And obviously, there are some other cities like San Antonio that have had a higher loss because they're mostly a retail and hospitality economy and trade economy, and all of those have been sectors that have been impacted by the pandemic. Um, and every day you get some rankings of saying Austin is well positioned to be the top performing city in the country for the next 25 to 30 years. I wholeheartedly agree with those statements. And I will share with you later in this presentation that we will definitely achieve rates of growth that we've never thought possible for Austin. I'll cover the real estate markets because I know a lot of you are investors in your own homes and investment properties or other types of investments. So you'll be interested to know about my forecast there. In Texas, we had a nearly 4% decline in employment. That is not only because of COVID and the pandemic. It's also because of significantly depressed prices in the oil and gas industry that had more than 50% of our marginal wells in drilling in Texas go under. And, but Texas is used to this type of um, peaks and valleys. And this is a place where a lot of money is being made, a lot of money is being lost. But over time, you make more money than you've ever lost. So we're risk takers. Anyone in the oil and gas industry has to be a risk taker. And I believe we're going to recover all the jobs we've lost this past year in 2021. And I'll show you that in a minute. California obviously has seen an 8% decline in employment, Washington State as well, Colorado. So overall, I think Texas has done a pretty good job in sustaining itself through this pandemic and through the oil and gas crisis. Texas lost nearly 435,000 jobs last year. It had 4.2 million in first-time jobless claims, a record. We've had a history of recovering from oil and gas booms and busts. But we're on a trajectory to create a significant number of jobs in 2021 and beyond. When we look at the drivers of Austin's economy, and there are plenty, I would put first and foremost among them the level of innovation that is taking place in our community, the level of venture capital funding and angel funding that goes to support our startups. We are one of the most successful and recognized now centers for high tech and entrepreneurship, and this trend will continue unabated. So last year we had nearly a record, well, it was not nearly, it was a record year for patents. We're averaging about 5,000 patents per year. When we look at Austin venture capital funding in Austin, Texas slipped behind Washington State, but still at over $2 billion in venture capital. Austin is the center of that type of activity. We attract nearly, actually more than half of the state's venture capital. Dallas and Houston basically make up for the rest, and the rest of the state just has a small level of venture capital investment. So in terms of entrepreneurship, we are the entrepreneurial capital of Texas. If you want to be funded, if you have a very successful startup, the chances of you being funded in Austin are far better than they might be in Houston or Dallas or elsewhere in the state. We took one step further to look at the startup ecosystem, which is valued at $17 billion in Austin. When you look at our overall economy being at about 185 billion, that's a good chunk therefore of our current as well as speaks very well about the future of technology innovation and entrepreneurship and wealth creation in our community. Every time there is a substantial investment made in one of our companies, there is employees who own stock options. There are the founders who own a lot of stock. We have a new class of millionaires, if you will, when we look at significant venture capital being invested in our community. One of the charts I like for selfish reasons, this list came about from TechCrunch, listing the top 10 companies in Austin that received the most funding last year. Well, number 4 and number 7 are portfolio companies of the International Accelerator. We had partial exits in those. And 1% equity in Restream is worth now almost 1.4 million. Skooks has also done pretty well. They've raised 30 million, Restream 50 million last year. So we have been quite successful in attracting the right type of companies. Some of it might one argue that is great luck, and I say, sure, I'll take luck any day over being smart. But we have a couple of companies in our portfolio that are in the unicorn trend, and a couple of more that are probably going to be in the $350 to $450 million potential exits. So I'm very, very proud of our accomplishments there. Let's talk about real estate. We have very, very healthy real estate markets. The office market is an exception because a lot of people have been working out of home. A lot of companies are comfortable in allowing people to work out of their homes. But that will change. Not everybody likes to work out of their home. I live 4-5 miles from my home, but I come to work every day. I want to be in an office environment, talk to my employees, and my employees are here every single day. We have taken active measures on COVID. Most of us are fully vaccinated now. So we've managed to do so well. And I say most companies, or most rather people, would prefer to be at the office. Because COVID-19 actually having everyone at home has caused a lot of stress in a lot of families. The divorce rate has skyrocketed. And I wonder, how does one get promoted as a remote employee if they don't interact with their managers, if they don't interact with other members of the team? So my gut feeling and some evidence will suggest that maybe 10 or 15% of the US workforce, particularly here in Austin, will continue to work remotely. There was already a pretty much high level of remote work out of Austin because of a tight labor market, and companies actually allowing people to work out of their homes as an employee benefit. But my judgment is, and my gut feeling is, that most people would prefer to go to work when the conditions are safe for them to return to work. So as a result, we've had a negative absorption on office. We, at the same time, had quite a bit of new construction. The actual vacancy now, including sublease space, is close to 16%. And I suspect that it will take 2 to 3 years to work off that inventory. And that inventory is mostly found in larger buildings, office towers downtown and elsewhere, not smaller buildings. In fact, the value of those buildings is going higher and higher because many entrepreneurs want to lease smaller spaces to be at. And so the office market is kind of lopsided. There is a lot of sublease space on one hand for larger scale projects, and there's a very tight demand for smaller buildings. Industrial, on the other hand, is booming. We had over 3 million square feet of net absorption. This is happening primarily for two reasons. Obviously, large-scale manufacturing plants like Tesla's Gigafactory being built here. Amazon has built one of the largest warehouse distribution centers in Austin, in Pflugerville. But net absorption is going to continue to grow substantially every year because many companies, including high-tech companies, have opted to lower their lease rates and move into flex industrial space, which is 1/3 of the lease rate that is available in our office buildings. In fact, our office buildings pre-COVID were higher rent buildings than Chicago or Los Angeles. They went through the roof. So we're seeing a small correction, which is good, a lot of sublease space, but in the office market, but the industrial market is going to be booming. The retail sector also has seen quite a strong absorption. You know, when you gain 60,000 new people per year in your community, a lot of those folks need to eat out, a lot of need to be shopping, a lot of them will have to buy high-ticket items like appliances to furnish their homes or furniture. So there's a significant demand there on retail, even though most analysts think that Amazon is taking over the retail business. There's still a lot of small retail business that is going on in Austin. And I think will continue to grow because the dynamics of our economy are so different than other cities where the economy is growing at more predictable rates than Austin's is. The housing market, what can I say? It's booming. Most people ask me, is this going to continue? My answer is yes. The supply is so limited right now. The demand for housing is so high that we're beginning to see offers at 15 to 25% higher than the asking price. The inventory of housing is down to 16 days. And in certain areas of the city have seen almost doubling of the price per square foot in just the last 4 or 5 months. So would increased mortgage rates slow the market down? The answer for me is very simple. They will not. In fact, what higher rates do is typically affect the funding also for developers to build less homes. And the last thing we want to be doing in Austin is constricting further our inventory. So as long as Austin is a popular destination for people to come and live here and find employment or work with any one of our major companies, we're going to be in a housing boom for the next 10 years. Is it sustainable? Well, for a good part of the people buying these homes coming from California or the other East or West Coast locations, Austin is still a reasonable place to buy a house. For a lot of the local participants in our economy, if you own a home, that's great. You've built some pretty good wealth by owning a home. But for those that are aspired to be homeowners, is going to be an issue of affordability, which has already we've been facing for the last 5 to 7 years, actually, in Austin. It's nothing new. So prices will continue to rise. This is a snapshot of the market in January. As you can see, the median home price went up 19%. We had the inventory down, the new listings by 11%, active listings even fallen more so. The inventory in January was 33 days, now it's 16 days and getting worse. And some areas of the city really don't have any inventory whatsoever. In fact, information I'm getting from brokers is that many potential owners, they knock on people's doors and saying, I'm interested in buying your house. Would you accept my offer? And some of them are tempted to actually sell because the offers are just so remarkable. The distribution of our real estate market is such where only about, I guess you could say 10% of our market is over the $750,000 range. But with these price increases, we're going to see more and more of the housing stock in the upper ranges. So these numbers are going to change over time. It's become nearly impossible now to find a home in Austin under 200,000, unless you want to live in a trailer, or unless you're willing to commute rather an hour away from Austin. Most of the homes now in the $200,000 to $300,000 range are, given the valuations of these homes being increased every year, they're going to shift to the $300,000 to $400,000 category. So we're going to see a shift to higher priced homes and with higher distribution of the market, edging towards the higher price homes. In terms of multifamily, this is an area where there is a strong interest from investors. During the pandemic, a lot of people could not make rent. So had it not been for federal help to help renters as well as landlords, the market would have been in much worse situation. The market obviously has adjusted by building less units, but at the same time, as soon as we see the economy recovering and the market becoming more balanced, we're going to see 16, 17,000 new units of multifamily being built every single year. Same thing in Texas. When we look at Texas multifamily construction, Austin is number 3, just behind Houston. The Dallas-Fort Worth is the largest market, which, by the way, it's also one of the most affordable, along with San Antonio and Houston. Austin is the most expensive real estate housing market in Texas. So let's talk about the forecast. A brief look at my record of forecasting. I've missed 2 major recessions. Most of my colleagues have also missed those recessions. But on every other year, while our forecasts were sometimes twice as aggressive as many of other fellow economists, our forecasts tended to be below the actual performance of the economy. So in a way, we've been conservative, even though we have provided the most aggressive and bullish forecasts for Austin and Texas. So I feel like we have a pretty good read on the economy here. You cannot just forecast based on a straight line and what happened in the last 10 years will happen again in the next 10 years. We look at a lot of different data that will allow us to look at job creation and population growth in Austin that allows us to be the most accurate predictors of economic growth and forecasts in the future. So for Austin, I think we're going to be at just 2.4 million in population by 2022. My gut feeling is that when the census numbers come out, even though this was a very unusual year for which to do the census last year, just like before, the census discovered that we had 180,000 more people living in Austin than the census was reporting, and roughly about 110,000 more jobs than the Bureau of Labor Statistics was reporting. I feel the same thing will happen again, because the forecasts are done on data that is about 9 months old. And moreover, every year the numbers for Austin are updated because there's no forecasting model or survey model which is distributed kind of evenly along the state of Texas. There's about 20,000 surveys that go out from the Bureau of Labor Statistics every year. Maybe about 1,800 are from Austin. They don't necessarily consider the uniqueness of our local economy. So the surveying of employers tends to support larger employers rather than smaller employers, which is an area of significant differentiation between Austin and other parts of Texas. So they will predict more of a downturn or a growth spurt in larger employers than they would predict a growth on the entrepreneurial side of the economy. And that's why every year the Bureau of Labor Statistics basically trashes all the numbers that they've been giving you a month on a month basis. And traditionally their forecasts have been revised by 30 to 40% higher than what you are being reported to on a monthly basis. So without having a base, it's very difficult to forecast the future economy, but I think we have a pretty good handle. The forecasts on population and employment will actually be exceeded in my view. In terms of job creation, we've lost 23,000 jobs. My take is that we're going to definitely have a positive job creation of 22,000. This forecast was made a couple of weeks ago. I've seen more data now that was dependent on how soon we predict the recovery will occur. And I believe this year we may be close to 26 to 27,000 new jobs being achieved, not just 22,000. In terms of Texas, the population is going to exceed 30 million by 2022. Texas is growing its population by almost 450,000 people per year. This has been one of the net gainers, the highest net gain of population of any other state in the country. The forecast is, even though we've lost 434,000 jobs in 2020, not only the pandemic is going to be over and helping grow the hospitality and entertainment sectors in Austin, but the oil and gas sector, prices have firmed up to the point where we're going to see more activity there and hopefully some job recovery that will allow us to have close to 520,000 new jobs this year. Now, what are some of the takeaways from my forecast? There's a few areas in which our economy is going to receive significant stimulus. One of that is the $7.1 billion in roadway projects, Proposition A, that passed. Money's already been spent, and money will be spent for the next decade. Honestly speaking, I was not in favor of this package for one simple reason. I am in favor of spending as much money as we can on transportation, because this is going to determine how much of a lifeline we have for our future economy. Is it going to be 10 years, 20 years, 30 years, and so forth and so on? Light rail is a feature of tourist towns. it doesn't move people fast from the suburbs to Austin. The average speed of our current light rail is 17 or 18 miles per hour. Has any one of you driven a car at 17 miles per hour? It takes an hour plus from Cedar Park to come to Austin. Um, and light rail is not available anywhere. My sense is that we should be rather have been spending money on a monorail or subway that will move people. It's going to be expensive, no doubt about it. But longer term, it is either a monorail or subway that serves the interest of a growing economy in Austin and moving the labor markets from the outskirts to the core city. That's my idea. The second thing that we could be doing is creating employment centers in the 4 quadrants of our major metropolitan area so that people don't all commute north and south or east and west, that they stay employed in their a regional hub of employment, if you will. However, that will take consolidated government that will be willing to share revenues, whether it's property tax or retail, according to population throughout the metropolitan area. And while it is a novel reason to want to do that, and probably economically extremely important for the future vitality, I don't know whether our local governments, whether be it cities or counties, will ever support this in my lifetime. Having those employment centers in the quadrants of our city would allow people to work much closer to where they live. They will alleviate traffic congestion on Mopac and 35 or east and west, which I guess it's almost non-existent in Austin in terms of capacity. And provide a lifeline of another maybe 20, 30 years of growth for our economy. Otherwise, I've seen firsthand what happened to the market in the Silicon Valley, where people moved out of major metro areas, having 1.5 hour or 2 hour commutes to be able to afford the housing. And that is not a healthy situation. In Austin last year, 30% of all homes were built in unincorporated areas. People are looking for cheaper land to build on, less regulations from the city, which adds another $13,000 to fees for an average home in Austin. But this will also have adverse impacts. Right now, our commute times are just 1 minute higher than the Silicon Valley. But as more and more people move on the outskirts of our city or in unincorporated areas, their commute time will actually increase substantially. And I'm looking for a dramatic increase in our commute times over the next few years. Austin has the most traffic congestion of any city in Texas, and it's going to be among the highest traffic congestion cities in the US. That's not something I want, and we need to find solutions as a community to fight these trends. The positive stimulus, obviously, Apple is building $1 billion campus, Tesla, a gigafactory of 1.1 billion, Oracle and Digital Realty are expanding, moving their corporate headquarters to Austin, HP in Houston. Amazon is hiring as many people they can here in Austin. Samsung is intended to build a $17 billion plant on top of the $16 billion that they have invested. As Elon Musk suggested, I guess 3 or 4 weeks ago, and I retweeted his comments because I heartily support his thesis, is that Austin is going to be the new boomtown in the US for the next 50 years. And as I said earlier, the kind of growth that we're going to see is unprecedented. short of a major international catastrophe or disaster, I think Austin is going to have a very strong economy now and in the future. In fact, the types of growth that we're going to be seeing have never been seen in Austin before, and very difficult to even predict the exact growth of the economy. So another stimulus will be coming from the $2 trillion stimulus to our economy from the federal government to support small businesses and people with loans. The winter storm, believe it or not, is going to put another $20+ billion in claims in our economy in Texas. And while we see this as a natural disaster with negative impacts, what I can share with you is many years ago, I was doing a project in Corpus Christi, and I was interviewing the mayor. And the Corpus Christi economy was not doing very well, kind of in a stalemate and stagnation, if in fact. And I asked the mayor, I said, what would be the best thing that can really happen to your economy? And he didn't say if we recruit a new company or another major shipping company establishing themselves here in our port. What he said was, we need another hurricane to come to our community. And because insurance settlements provide new impetus and support a lot of growth. And that's exactly what is going to happen and is happening already in Texas with a $20+ billion in insurance settlements because of the ice storm. A negative factor will be the tax increases that are being talked about. Don't want to speculate again of what might be. It would the corporate income tax rise from 25 to 28? Would capital gains double? Would individual tax rates also have to go higher? No matter how you cut the slice, taxes have to be raised to be realistic. And with any administration, because we've reached a level of debt which is unsustainable. And my prediction is that, yes, it's going to have a negative impact on some type of investment, but also we have to be realistic that a lot of companies have made a lot of money and have seen a lot of growth and benefited from the last few years of economic growth. And I believe some level of tax increase will be well accepted because there's no other option. However, just as we're going to leave the dominance of the COVID-19 and the pandemic from our economic future, hopefully in another month or two, the dominant discussion for our economy in kind of midsummer is going to be the high debt burden and how we pay for it. Even the tax increases that have been suggested, not in policy yet, suggested, will not cover, but 20% of the new debt burden that our economy has taken on through the pandemic so far in the last year or so, and even with a $2 trillion support now. So we are highly indebted, much more than Europe. I want to say that up front because we often talk about Greece and Italy and Spain, but overall the EU is less indebted than the US. The least indebted country is actually Russia. China is highly leveraged, but with 8% growth on their GDP, they can probably sustain that level of debt. But with growth rate in the US in the next year or two getting back to 2% or possibly even under 2%, I don't know how that burden will be dealt with, other than policies that would reinvest in the U.S. economy, um, tax policies that will help businesses invest, and rather than invest in share buybacks, which don't contribute anything to the U.S. economy. Hopefully, some of the tax incentives will be targeted towards investment in plant and equipment to grow our economy a little bit more than the 2% long-term forecast of GDP growth. So that is my forecast. That is my presentation. I'll be more than happy to answer any questions.
Excellent.
I'm sure I don't see the chat menu, but Satish, you have access to all of that? Okay, well, fire away.
Yeah, that was an excellent talk, Angelos. Thank you very much. So I have a couple of questions here I'll tee up, and then I'll look at the Q&A as well. So one, I think you already touched upon, which is the likely impact of the new spending by the Biden administration. So one sort of sub question to that is there a risk of inflation? Because recently you see a lot of conventional wisdom among economists who say what you knew about inflation when you went to college, that definition does not hold true anymore. So would like to hear your thoughts on that, and also about the tax increase and how does it hamper growth?
Well, a lot of things have changed as far as acceptable norms of economic theory.
Right.
When I was going to school, unemployment, a full unemployment rate was considered to be 4%. Later, we changed it to 5%, and even 6% at some point in time was accepted. Inflation rate was considered to be healthy at 2.5%. Most of the Fed targeted an inflation rate of below 2%. Yes, inflation has gone up slightly since the beginning of the year. I think this year will probably go to 2.6, 2.8%, outside of the Fed's targets. But that's only consumer goods inflation, CPI. We've had significant inflation in asset prices, whether we're talking about real estate of all types, whether we're talking about valuation of companies that are out of this world. So inflation has persisted, but in assets. And some of those assets have been overly priced, in my opinion, and there will be a correction. As far as consumer price index, the Fed thinks that the inflation rate of 2.6, 2.8% will be temporary and inflation will come down. I tend to agree with that because as economists are struggle to recover from the pandemic, the last thing that they would want is consumer inflation. And there's so much flexibility also in the US economy that CPI can be absorbed comfortably if it's as long as we don't get back to 16% inflation per year like we were in at some point in time during the Carter administration, and interest rates going to 18 or 19%. So I don't think inflation is a problem as far as CPI is concerned. Inflation has already been a problem for as it relates to asset prices, and there will have to be a correction.
Yeah. So another question I have is Austin becoming unaffordable for the middle class? You kind of touched upon that, but I have a rejoinder to it, which is, in the Bay Area, it's come to a point where people who work in the service sector, like restaurants and other supporting economies, their commutes are starting to be 40 to 45 miles outside of the township that they come into.
Mhm.
Do you see those kind of concerns for Austin in the future?
Absolutely, I do. The market is unaffordable for the average income earner, particularly those that are working in the hospitality industry or the teachers, the police force, state employees, one might argue. Many of them live in Taylor, Texas, in Leander. Um, they're trying to find locations within the metro area to live, which are offer more affordable housing. So commute times will increase substantially. I made that point earlier. Um, we're going to exceed commute times of that Silicon Valley in the next few years. Um, how we deal with traffic is going to determine how long can our economy continue to grow and grow very healthily. Um, just like in California, when people could not afford to buy a house, when people spend most of their time commuting, um, a lot of companies could not attract the labor, and companies started looking at other markets, including Austin. Now we're kind of mirroring what has happened in California here pretty well. We may still be less expensive, but the way this economy is growing, we're catching up pretty quickly. Um, so I think that that is a major issue for Austin, affordability as well as traffic congestion.
Right. So I have another question here. So given the growth in the high-tech space, not to mention all the corporations moving to Austin, is that also a factor that's contributing to the employment drop for less skilled jobs? How do you see that playing out in the future?
Well, I think based on the mix of employers that are growing in Austin and have announced significant headquarter facilities, I think if anything, the wage levels of those jobs will be um, causing the average wage in Austin to go higher.
Okay.
So that's the good news. However, a substantial part of our economy is in the service sector, and those higher jobs may be able to afford a higher price home, but not for long unless there are also substantial increases in wages. And that always seems to be falling behind the rate of increases in housing prices
Mhm.
and the overall cost of living. So it's a challenge that has to be overcome. Is Austin going to become an elitist community, or is it going to take measures to become more affordable? The question is how to. I mean, it's very difficult to stop or redirect the growth, if you will. Do you want to not incent higher paying jobs when they are the impetus for a lot of the growth that we see in the service sector? Do we want to incent only lower paying jobs? Uh, I don't necessarily see a whole lot of logic behind that, even though the city and the county have attempted to do that. Um, Perhaps a more concerted effort to acquire properties now and allow them to be through the Austin Housing Authority, which it's been done to acquire up to 40,000 apartments and residencies and set them aside for low income housing eventually, meaning that if you take control, you pay a less return to your investors, but it would limit the type of rent increases year over year, and over time, I guess you can create the conditions for a more affordable product. Just like Mueller Airport, if you recall, the city wanted to allow affordable housing to develop there.
Yeah.
There's some pretty good restrictions of what you can buy and what you can sell it for. You cannot sell for more than 8% profit. um, to allow the market there to be more affordable. But given what has happened in Austin's economy, I can hardly think that even Mueller now is affordable.
Exactly.
Housing prices there have also skyrocketed.
So there's a follow-up question here
Sure.
about what Elon Musk is referring to when he calls Austin the next boomtown.
Mm-hmm.
So the question is that growth related to increase in productivity, i.e. GDP, or plain supply demand challenge?
I think is related to economic output, GDP.
Mhm.
It is related to employment opportunities and raising the average wages. The Austin market has been fairly tight over the last decade, is going to get tighter in the future. And he's also seeing an influx of newcomers to Austin at a much higher rates than we have seen in the past.
Right. So here's another question.
Mhm.
Can you elaborate your views on the impact of trends in energy transition, circular economy, impact on oil and gas, and overall implications for the energy sector in Texas and Austin in particular?
Would you repeat the first part of the question?
Yeah, so it's impact of trends in energy transition,
Mm-hmm.
sort of going from oil and gas and overall implications for the energy sector for Austin.
Well, it's interesting that you bring up this question. I tried to answer it before in other presentations I've made. Oil does not have anything to do with electric prices in Texas or even much of the nation. Yet it is related.
Right.
It's gas prices that have an impact on energy production, electricity, because many of the power plants today are gas-fired power plants. Many of the peaker plants are gas-fired power plants. But there's also a movement from particularly the high-tech companies and the substantial growth in data centers to become a bit more responsible corporate citizens and prefer renewable versus other forms of energy. So I think we're going to see an explosion of growth in both wind as well as solar in Texas and throughout the country.
Mm-hmm.
But it is still a small part of energy production in the U.S. We need to get it up there to 30, 40, 50% of energy production, and we're not there yet. So ample opportunity for wind and solar, and mostly technologies that related to storage and micro grids, if you will, that would allow for the more efficient distribution of power and hopefully longer term lower prices because of storage facilities that are going to be the future determinant, I guess, of energy prices in the future.
Mm-hmm.
So you store energy from wind at night when there's not much use for it, and you consume it during the day. And wind power now, I mean, the city of Austin buys it at 1.8 cents per kilowatt hour, but when it's becoming part of the mix and the grid, you don't pay 1.9 cents. You pay a lot higher price,
Right.
Particularly because you cannot just power everything with wind and solar. Those two sources have to be balanced with gas-fired power plants to be able to sustain the grid. Otherwise, the grid will go down. So it's a balancing act, but overall, I think we're going to see an explosion of renewable energy investments in the U.S. and throughout the world, quite frankly.
Mm-hmm. So I think I have one last question here.
You can ask as many as you want. I have plenty of time.
Absolutely, sure. So here's a question. What's your take on Bernie Sanders' idea of taxing stock transactions. I'm trying to see if this has anything to do with the recent Robin Hood effect of so many transactions happening, is my hunch. But in any case, what's your take on taxing stock transactions themselves?
Well, any discussion about taxes makes people uncomfortable.
Right.
And certain taxes will affect certain constituents, if you will, in our country. So I think it would make sense to have a number of different tools that will distribute the tax burden throughout the economy, particularly those sectors that have benefited the most, if you will, because that's how you can raise tax revenue.
Right.
I go back to a couple of things. In the 60s, corporate income tax made up 23% of US tax collections. You know what it is today? Around 8%. And we're still talking as if we are overtaxed as a country.
That's
and
right.
We compare ourselves to every other country where they have lower taxes and so forth and so on. That is not a fair, in my view, comparison. Every country has a tax policy based on their economic strengths, based on the makeup of their economy, based where a lot of opportunity exists and where a lot of money is being made. So asset inflation in the stock market has created a new class of billionaires that made a ton of money. When you're, I'll give you a classic example. When you're able to borrow on margin money at 1% or 1.5%, simple math will tell you, well, put it on dividend stocks and
Exactly.
you'll be a winner. So we need to find a multitude of avenues to have a more fair tax burden for everyone in the US. So am I in favor of it? We all have to see exactly what the proposal is. And while I've heard of him suggesting that, I don't know what numbers he's suggesting. So I've seen Warren say 1% tax on the billionaires, Bernie's idea of tax on transactions, something. All of these taxes our current taxation system is fairly regressive, and we need to, in many ways, with all the tax cuts that we have had, we robbed our nation's ability to raise tax revenue. And so some things have to change in this regard.
So one of the observations I see, and it could be a question as well, impact of government spending on Social Security. What are your thoughts on that?
Well, I grew up in overseas in places that back then may have been more of a socialist in nature, where education was free, healthcare was free. I've seen places where they've done well with a hybrid of paid and free healthcare, hybrid of free and private universities. Obviously, we're spending a lot more than we take in. So part of the tax situation, and we have this almost every year. I'm not aware of any year in which the um, limit on income has not risen higher and higher and higher. So rather than increasing the rate, we take the limit higher. So again, I'm supportive of the idea of looking at a multitude of options to raise revenue for the country, but at the same time, not to support uncontrolled spending. I mean, that would be the wrong reason to raise taxes.
Right.
We need to cut spending wherever we can cut it. We need to be sure to have support for the lower socioeconomic groups, definitely as being the richest country in the world. But I'm in favor of looking at a multitude of taxes to get us out of what I think is going to basically direct all the discussion in the US, particularly to the related to the economy in regards to the debt that we have accumulated. And that we need to put also a stop to uncontrolled spending on borrowing money to support Social Security.
Right.
So we need to, I guess the Social Security fund is going to run out of money in the next decade or so.
Yep.
So we need a comprehensive policy. We hope that there is bipartisan support. I hope there is, because the party that we've been on for the last 4 or 5 years cannot really continue.
Yeah, I think, no, that's definitely, the only issue there is, there's a little bit of that entitled aspect to the Social Security because you contributed over your earning life. So you have an expectation that you'll get something in return. So there has to be a balance in terms of it's more to do with something earned in as opposed to a social net. So
well, I mean, we've done quite a bit of reform already, but obviously it was not enough. My kids are going to collect Social Security when they are 68, 69. Over time, it may go over 70.
Right.
So you'll be collecting Social Security just for a few years before you die. I think that we need to look at a very comprehensive solution. There's been a lot of proposals also to get rid of the sales tax at local and state levels because it is very regressive and penalizes the lower socioeconomic groups. Is it time now to maybe consider what I would call a VAT tax like Europe has, that taxes its level of production rather than is a sales tax at the consumer level? That could also be a solution for raising more capital for the US or the federal government and individual states. It just is appropriate now to start looking at comprehensive solutions that will carry this economy for the next 20 years and not just be looking at patching stuff up the way we've been doing it for the last decade or so.
Yeah. So thank you, Angelos. I think that was a very enlightening talk this afternoon. I know I can speak for myself and the rest of the attendees that we benefited very much from it. And thank you again for giving us this time and your insights and perspective on the economy. Thank you.
Well, thank you so much. And let me say I wholeheartedly support Ty and what it stands for and what it's doing for the community, not only here in Austin, but throughout the world. Austin has a pretty strong chapter. Thank you also for referring me to the Texas team, as well as the Thai team in India, where already we've had discussions. Many of 5 of our portfolio companies are from India. A number of them are going to be doing pretty well. And, you know, I need your support. Our portfolio companies will need your support when they're able to come to Austin when travel restrictions are lifted. So it's a win all around. I intend to recruit far more companies from India. We have a joint venture there with India Startup, Startup India, the organization. We had a call with them in the last week. They want to support us even more so than in the past, and joint marketing programs and so forth and so on, which we're about to start implementing in the next 15 to 30 days.
Fantastic. So just a reminder, our next webinar is going to be on the 13th of May. It's going to be about the post-COVID world. It's a panel discussion. Jayashree, anything else before we conclude?
No, that's it.
Yes, one thing,
Okay.
Cheryl, you asked a question. Yes, you can, as a non-entrepreneur, join Thai Austin. Contact me through the website, president@austin.thai.org. And I'll be happy to help you out there. Thank you. Appreciate your question, Cheryl.
Okay.
And Jayashree, thank you for making my presentation possible.
Absolutely.
It all started-
You're welcome anytime, Angelos. You know we love you.
Thank you.
And anything else we can do, because you're doing wonders for Thai. We really appreciate it.
Well, I think there's a good symbiotic relationship that we can have, and make the chapter here locally stronger, and Thai overall as a global organization even stronger than it already it is. I see India as actually fueling a lot of the entrepreneurial ecosystem in the US, as well as in Europe and other places like the Middle East. You know, entrepreneurship in India is alive and well, and you are going to become a catalyst for entrepreneurship throughout the world.
Yes, we are the largest globally, no doubt about it. And I think one of our global representatives on the call here, Vijay Menon, and he will attest that every year we are opening new chapters around the world. So
Fantastic.
thank you, Angelos, for all your support and everything you do for us.
Well, thank you.
Thank you all for attending. Thanks, Satish. Appreciate your moderation here.
No,
Have a great weekend.
All right. Thank you, guys.
Bye-bye.
Stay safe, everyone.
Have a great evening.